Hey everybody, Economic Ninja here. I hope you're doing great. On the heels of the video I just did the other day, where it was a warning from a government entity, a government agency, about banking with using PayPal, Venmo, and other third-party payment apps, and how they are not all guaranteed by the FDIC. They're not all insured, right? You would have to take special steps to get your money insured by the government. There's an interesting story out of Yahoo Finance with PayPal, and this is the title of it. PayPal's 80% stock plunge hasn't soured Wall Street. Now, this is getting really interesting, and it's starting to heat up. You know that as banks and companies lose share value, right? The value of the share plummets. They have a harder time justifying certain moves with their company, going out on limbs and taking risks. They also have a hard time gaining extra money, getting access to credit at good rates. Why? Their valuation's fallen, okay? The other thing is they can't just run out and sell extra shares. Why? Because they don't want to. They don't want to dilute their stock with very inexpensive shares, because if they have to raise a bunch of money, they have to print even more shares, okay? So you can see it becoming a bigger and bigger problem. Now, it says right here, for the majority of PayPal holdings, analysts, the only way is up. Trouble is the stock keeps going down. It says almost 2/3 of the more than 50 Wall Street firms covering the digital payments company has a buy or equivalent rating on the shares, according to data compiled by Bloomberg, and not one has a sell. Okay, let me stop there and say, how many times, and put it down in the comment section below if you've been following this as well, how many times are the analysts dead wrong? And not only that, when they finally come around to downgrading a stock, it's too late. It's already dead man walking, all right? So again, PayPal falling 80%, and they're saying buy, buy, buy. It's almost like the analysts have no concept that the economy is falling because they read the wrong books that were force-fed to them or spoon-fed to them in college. I'm just saying, I'm throwing it out there. Let me know if you agree or disagree with that down in the comment section below. So not one of them has a sell. The data shows something can't be said of Apple, Microsoft, or even the latest market darling, NVIDIA. You know, these companies that have these astronomical PE ratios or price to earnings ratios. It's absolutely ludicrous. We're talking about PE ratios that make the dot-com bubble and the housing bubble back of '08 look like a complete joke, okay? They were nothing compared to what we got here. Analysts were similarly bullish in mid-2021 when pandemic-fueled revenue growth was pushing the stock to record highs. No one predicted that plunge of about 80% that sent PayPal spiraling to 6-year lows late last month. Weird. Nobody saw it coming. It's just like what's coming next. Nobody's going to see what comes in the fall to the late year. No one's going to see it, except for you guys. This time around, the market is trending more carefully. An analyst for Global X ETFs said investors are broadly skeptical of fintech names, given their sensitivity to the consumer economy at a time of high interest rates and inflation. Now, not only that, PayPal is technically a bank. People deposit money into it, they withdraw money, and they hold their money in there. They're a bank. The only problem is most of their accounts are not insured by FDIC, okay? And if the last 4 months have taught you anything, it's that you're going to want some kind of insurance in your FDIC, okay? Now, with that being said, PayPal does have a way of you insuring their accounts or your account. You have to request that it be put in a specific account, and that is with a bank they have an agreement with, that they put that in there. But you have to do a lot of work for it. You got to actually go and do it. Not everything you just put in PayPal is insured, okay? Do I use PayPal? Yes, just so you know, I use it. A lot of companies use it. But yeah, I don't like to keep a big balance in there. Now, it says here, what makes things harder for PayPal is poor growth and continuous margin pressures, he said. While the stock is a 5.1% holding of Global X Fintech ETF, the fund has been cutting its position since October last year, data compiled by Bloomberg show. The San Jose-based company has lost nearly $300 billion in market value as revenue growth that was turbocharged during the COVID-19 pandemic has slowed dramatically. The latest issue to rankle investors in sluggish profit margins. Still, PayPal has one key attraction. It's dirt cheap. You gotta love it. You know what's also dirt cheap, I noticed? First Republic Bank stock. I don't know if you know this, is down another 15% today. It's pennies. So do you think that's a buy? Just put it down in the comment section. But obviously that's what all these analysts that went to big important schools are telling you. They're big important name badges, and they're allowed to give you financial advice, just so you know, because that's how the world works. Don't take it from me. I'm not a financial analyst. I'm not a financial provider. Or no, I'm a provider, but not a financial advisor. I'm just a dude with a bro hawk and a dream, and I need some coffee. It's a little late tonight. So it's still cheap. It's still dirt cheap. That's the one thing they got going for it. At 12 times projected profits. Yeah, it's still 12 times. I mean, he's thinking, hey, that's really cheap. 12x profits, It could be like other stocks where it's like, 500. This is crazy town. It's trading at a record low valuation and is cheaper than 90% of the companies in the NASDAQ 100, according to data compiled by Bloomberg. For some analysts, being cheap isn't enough of a reason to buy. Well, that's actually very good advice, just so you know. Given the change in interest dynamics combined with slowing growth, because we're in a recession, we don't see PayPal regaining peak price to earnings multiples during the pandemic, said Logan Perk, an analyst at Edward Jones. Well, congratulations, Logan. You just made it to the Ninja's somewhat respectful list. He was one of the 3 longtime bulls to downgrade the stock after PayPal's margin forecast for the year fully disappointed. All right, Logan, you are now stepping it up on the list right now. You actually did something. You literally reacted at the proper amount of time. PayPal came out with bad forward guidance and you went, this isn't good. If PayPal knows they're going to be in the crapper soon, I should go ahead and just downgrade it. That's really good, Logan. So the Ninja salutes you. PayPal continues to focus on its largest core accounts, which should help drive solid volume growth. Oh, like charging people $2,500 for spreading misinformation. That's right, because PayPal, you're the global police. Yeah, see, they're going to make money somehow, or maybe they're not. People are going to pull their accounts and close them. Now it says, however, this business tends to be lower margin. We question how long PayPal can offset margin pressures with its disciplined cost control. Here's a question, guys. And put your comments down here. I want to hear what you think. If PayPal goes under, do you think that the government should bail them out? I want to know. I'm just curious. And the only reason I say that is because they could turn around and pretty much hold this system hostage and say, we're so big that if we go under, there's going to be blood in the streets. Oh, really? I mean, I get it. There's some people on Etsy and PayPal and Teachable and these other platforms that are going to need a payment supplier, but I'm pretty sure Stripe or some other companies are going to back it up real quick. They'll be like, we're here. We'll fix it. But the scary thing is companies like PayPal and others have gotten so big, it's almost that whole too big to fail. And that's what's scary. That's the real question. Let me know down below what companies you think are dead men walking. But I have a feeling that PayPal isn't far along. It might be time to start really looking at diversifying your income. I'll tell you what I'm going to do. I'm going to do it myself. All right, guys, that being said, I hope you got something out of this. The Economic Ninja is out.